as well as why they're getting the compute. Let's go back to the compute side. Coreweave, Meta, latest deal, an additional $21 billion agreement that will see Coreweave supply computing power to Meta through 2032. Let's bring in Robert Schiffman of Bloomberg Intelligence to discuss the financing of the deal, because interestingly, Coreweave also plans to offer, $3 billion in convertible senior notes due 2032, $1.25 billion also in credit. And maybe that's why the stock's down a bit, because of the convertible note. But it's not $21 billion worth. How is this all being financed?
Yeah, well, listen, to me, this is yet another wildly bullish statement from the bondholder community, is that we were willing to wave in bonds because we believe in the AI growth. Now, Coreweave has a lot more to finance over time, but they're being very creative. Today, they're doing a convertible deal. They're also doing a bond deal. Last week, they did a term loan backed by Meta's cash flows at investment grade ratings. So there's lots of different options that they have over time. But what we're seeing deal after deal after deal, when bondholders get offered bonds at wider levels, they're going to wave them in, and we're seeing them perform.
Robert, we're showing your research. You publish very quickly when the news headlines hit, and you give the credit perspective. And that line in the middle there, Meta and Coreweave likely to continue to tap debt markets. Why do they need to keep doing that? You kind of hinted at it there, but their commitments are very large, and they're still kind of finding the capital to meet those commitments.
Yeah, well, that's what we do at BI. We give opinions, and we give them right away. I think if you look, it's very simple. Go on to the terminal, check FA, look at consensus free cash flow for these names. They're massively negative. And when they're massively negative, you need to borrow money. I think Meta could be lined up to do an Amazon, Google-like $50 billion deal across dollars and euros within the next couple months, maybe even tomorrow if the borrowing window stays open. So exactly what's going on is you're seeing a tremendous amount of front loading of CapEx. So spending is happening now, and cash flows are going to follow later. So in the meantime, you fill it in with bonds. And again, there is a market for that.
Kara made a really good point. Like, why would the stock be down on good news? There's convertible, like in pre-market when the news hit, it went awoosh. But then there's some dilution there, and the credit perspective from Robert Schiffman of BI. Thank you very much.